Hello everybody, hope you are doing well. OBTA here. I just want to get on here and do a quick video on divergence. Alright, divergence is one of the main things that I talk about when I'm doing my live analysis, when I'm looking to take a trade. It's one of the main ingredients that I look for before entering that trade, okay? Whether you're taking a long position, a short position, these give good indications as to whether or not price is going to continue in your desired direction or reverse into your desired direction, and whether or not to take profits, etc., etc. Keep in mind, okay, this is a tool to use in your tool belt. It is an ingredient in the sandwich. Do not use it by itself in order to take the trades, all right? You need to have multiple variables lining up like we always talk about, all right? But let's get into it. Hidden divergence is going to be the continuation divergence, okay? The continuation signal, meaning that if you're making a series of higher lows, hidden bullish divergence should present itself to show that it will continue up, making higher lows and higher highs, okay? And in the inverse there, as there always is with bullish divergence, there's bearish divergence, which would be a continuation to the downside, okay? Classic divergence is going to be the reversal divergence, okay? It's going to be your reversal signal. So if price is selling off, then the classic divergence should present itself to give an indication that it's going to reverse back to the upside, okay? So just keep that in mind. Hidden divergence is the continuation. Classic divergence is the reversal, okay? So we're going to take a look at hidden divergence first. And we're looking at the S&P 500. But what you'll see here is a series of higher lows, and the way you're going to identify it is by using the trend line, all right? So you'll see this green line here, that's the trend line. You're going to notice that you have a low here, February 7th, before selling off, and then creating a higher low here on March 8th, okay? Now, here's a good example of variables to line up to confirm that hidden bullish divergence is playing out. And the correlation between them is going to be the price action with the oscillators. So if you're making a series of higher lows in price, you're going to be making a lower low on the oscillator, okay? MACD and the RSI are the two that we use. So if you're making a higher low in price, lower low on the MACD has presented itself. Lower low on the RSI has also presented itself. You do not need both. Both make it a stronger argument, but one will do. Now, what would have given you the indication that hidden bullish divergence is potentially confirmed and that there will be a continuation back to the upside is that you got it right at a level of historical support, and you got it with a bullish engulfing candle. You'll notice that the histogram went light red at that time, signaling a potential shift to the upside, okay? And that would have been enough really to show that this maybe was a good area to take the trade. Okay, you're at an area of support, showing the momentum shifting back towards the upside. All right, confirmation of the hidden bullish divergence. And as you can see, it continued on, continuation. All right. So that is hidden bullish divergence. That is the continuation. I'm going to jump over to the hidden bearish divergence now, okay? The inverse of the hidden bullish. Hidden bearish divergence, meaning a continuation to the downside. This is not the best example of it just because the S&P 500 overall it was in such a bullish trend that in a overall bull trend, bearish indicators don't really play out as much or as well as the bullish indicators will. But the hidden bearish divergence is going to be a lower high with higher levels of positive momentum. All right, essentially meaning that while there were more people buying the asset, they weren't buying it in a way that gets priced back above the prior high. All right, it's weak buying, small buying, buying in small amounts. Okay, showing a continuation of weakness in the asset, which resulted in it selling off before catching support locally. But that's the gist of it there. Okay, higher high in the oscillator, lower high in the price action. All right, so that's your hidden bearish divergence. Now, to the classic divergence. Remember, classic divergence is the reversal signal. We're going to take a look at Class A bullish divergence. There is Class A, B, and C. A being the strongest, B being second strongest, C being the weakest. Here, for time's sake, we're only going to look at Class A. So here it is. lower lows in price. So when the asset is selling off, this is when you want to start looking for Class A bullish divergence, okay? And what it is when you have a lower low in price, but then a higher low on the oscillator, meaning that the selling momentum is starting to weaken. It's starting to fall off, all right? Buyers will see that, especially when approaching levels of support, and feel comfortable getting into the asset at that point to confirm the reversal back to the upside, okay? So that's what you had here on the Class A bullish divergence. Notice the orange line, 2,720, was a level of support where the hidden bullish divergence here played off of. Now the Class A bullish divergence reversal indicator playing off it as well. Okay? So that's your classic divergence. And then the Class A bearish divergence, inverse of the bullish, is when you have a series of higher highs or just a higher high with lower highs on the oscillators, okay? So you'll see here, July 5th, you had a higher high, but not as much buying momentum down here on the MACD or on the RSI, meaning that there is not as much buying going on here as there was back here. All right, meaning that there are less buyers in the market, which presents an opportunity for sellers to come in or people who did buy back here already to sell off, open up short positions, whatever the case is. And as you'll see, at that time, it did sell off before gaining support and then moving into the hidden bearish indicator, okay? So that is pretty much it. All right, so I just want to do a real rough video there just to have it up for you to look at. Go ahead, tune into the live stream, like the video, subscribe, comment if you have any questions down below. I'd be happy to answer them. But just wanted to throw this up so that you can have an idea of what I'm talking about when I get into the divergence stuff. All right, so I appreciate your time, and remember to always keep it technical. All right, guys, have a good day.